Hey folks, so in the papers today there's concern, alarm bells are ringing apparently, over the economic recovery in the UK as families close their wallets. So there's great concern that Britain is lapsing into a mediocre and disappointing recovery as confidence among manufacturers falls back and inflation surges. Now the problem that's occurring is that regular families like yours and mine are looking around at the financial situation and saying, well, I really can't risk continuing to keep spending as we've been spending. And the figures are just mind-blowing. So in the boom years of the second half of the 90s and the early 2000s, when everyone was borrowing like crazy, the figures were 1997 to 2007. Families withdrew £320 billion of equity from homes. Almost £100 billion of that came in 2006-2007. And this is, that was said to be unsustainable. And then, the economy started to fall over. Not just our economy, but right around the world. And it's still happening, isn't it? Ireland's suffering, Portugal's still suffering. And the UK is certainly not out of the water yet. The US is, according to some, on the edge of bankruptcy. So excuse me, the situation's not stopped, and so now there's this concern in the business world that British families are paying their mortgages off, paying their credit cards off, getting rid of their bank loans, etc., overpaying their mortgages, so while the interest rates are low, so that when interest rates start to rise, and hopefully that signals a recovery in the economy and house prices start to rise, then boom, they've got lots of equity. So British families, I guess families around the world, are being a little bit clever. But the problem is, as we know, with the way that the financial system's set up, if there's no debt, there's no money. With a fractional reserve system, etc., debt needs to be being created so that false money can be created. And if people are paying their mortgages off, etc., the total amount of consumer debt is going down, then the amount of money in the money supply system drops as well. And so that's why it hurts the economy, because then there's not the credit, there's not the finance around the false money. Just this money created out of the air by the banking systems. So this is the problem. It's not a problem for us individually, because we want to get rid of our debt instead of just giving away money to the bankers for the pleasure of owning that debt. But they don't like it. It says here, the findings come amid evidence of extreme caution by families in the face of their £1.45 trillion debt burden. Homeowners reduced mortgage debts by a record £24.6 billion last year, according to Bank of England figures. In the fourth quarter, households injected £7 billion of equity into their homes, the most since record began in 1970. With high deposits, bigger loan repayments, and subdued lending. Well, no kidding. Who wants to not take advantage of the low interest rates if you continue to work? So that's a problem, is it? There is a video in my bootcamp playlist called Money is Debt. If you don't understand why people paying their debts off and why that cuts down on the global money supply, go watch that video. I'll put a link on here once this video has been published properly. But yeah, how interesting, isn't it? Well, tough. Maybe people are starting to take charge of it a little bit. Here's something else that came up as well. So top Goldman man quits to join Haywood. In Times it says that the financier, no, hang on, let's just do this the other way around. So this Goldman Sachs head of UK investment banking is leaving to move on to an investment opportunity with former BP chief executive Tony Haywood. Now, senior bankers are saying, well, this is a bit of a blow for Goldman's. He's been there since 1999. He's been involved with deals including Centrica's £1.3 billion takeover of venture Talisman Energy's £1.2 billion offer for Paladin Resources, etc., etc. Goldman Sachs have declined to comment on what's his name again? Julian Metherell, choosing to leave. Julian Metherell. This may well be a face that we need to get familiar with in terms of the global banking elite. He obviously already is in with the elite, but maybe he's going to start rising up. So he's going to leave and go and work with this Tony Hayward on this investment opportunity. And then we find in the Times, that was in the City AM paper, we find in the Times that actually Nat Rothschild is in early talks with former BP chief Tony Hayward, because he wants to set up an investment company similar to the one that he did previously, that listed in London last year, raising $707 million, and then went on to strike a $3 billion deal to take 2 stakes in 2 Indonesian coal companies. So actually what you've got is you've got the guy leaving Goldman Sachs saying, hey, we're not going to comment on this. He's going to go and join Tony Hayward in this investment opportunity, and in fact Nat Rothschild is in early talks apparently with the former BP chief Tony Hayward. But in actual fact, this is again a nice bit of misinformation here. Rothschild is talking to Hayward. Apparently it's early days. It says later on, it might even fall apart. But this Julian Metherell has already quit his position at Goldman Sachs to go and join Hayward in this venture. So this is not in early talks. They've started this. And then it just goes on to kind of contradict itself a little bit to say the trio are well known to each other. Hayward and Rothschild have frequently crossed paths, and Metherell joined Goldman in '99 as an oil and gas banker, and has represented clients including BP and Centrica that the other banks have represented too. But apparently Metherell has told Goldman Sachs he wanted to retire. I don't think these journalists even read what they're writing, do they? So, there we go, that's interesting. We've got the Rothschilds, Goldman Sachs, and these 2 other characters, Julian Metherell and Tony Hayward, starting to collaborate on something. Another article about Britain's not spending enough, basically, and lamenting that the consumer, the lack of consumer investment is causing problems. In the UK, a couple of weeks ago, we had protests in London about the government cuts, and in my view, those protests were a little bit dubious, to be honest, because people weren't complaining about the efficiency of government. They were saying the government isn't spending enough, I'm not going to get enough now, so I'm going to complain about it. On last weekend there was meant to be another protest in Leicester Square as well. Now I've not checked the news to see whether that happened, but we've got yet another story here that on coming up on the 16th of April there should be about 500 protesters protesting against spiralling rail fares. And we're starting to see a build-up of this. We're starting to see a build-up of people basically protesting while the global banking elite go off to retire from one job but then just go and join another job. So Britons aren't spending enough, and that's causing problems with the economy. What's really telling there is debt needs to be in place in order for there to be money. Again, if you don't understand that, go to the link that I'll put on here. That's it for now.